Good morning, traders. It is Monday, June the 3rd. There's a lot to cover this morning. I'm going to kind of whip through a bunch of stuff and just kind of give you a good general feel of kind of where we stand and what's been going on in the market the last week or so. Overall, this is the SP 500 daily chart. I'm going to cover the SP 500 and market breadth, kind of momentum all at once first here. Overall, yesterday I posted a chart showing that we're still in a strong uptrend. I do feel as though we're starting to get very close to a top if we haven't put it in already. Again, upward momentum carries through, and we may get continued sharp drop here, but eventually we should see some type of rebound. And at that point, the rebound, we have to see what the cycles are doing, what the price and volume are doing, how it rebounds for a potential move to the downside. Now, looking at the chart here, you can see we've got a nice strong uptrend, but you can see we're starting to get some high volume selling spikes. If you look at the high volume kind of pullbacks here, they seem to be on strong selling. So there is some distribution going on, but that is still normal within an uptrend. The thing I kind of want to point out here is simply when we get these pullbacks, you get an oversold condition, you get a small pause, you get a continued pullback. A three-wave correction or an ABC correction is a very bullish pattern. Usually it gets people in on the first pullback. You get to start a bit of a bounce, and then it starts to pull back even further. And everybody who gets in usually gets shaken out and exits the market on the next low. And that actually cleanses the market for a continued move. Now you can see it's done that multiple times. You get a three-wave correction. Here we had the same thing, sold off, had a bounce, came back down. And we've seen here another one, strong bounce, and now we're starting to get a strong pullback. So these are very normal movements within the market. That being said, we had some really strong volume. The way that this one candle happened to play out, where it rallied up really strong and then got hammered, that's a little bit more a sign of that the market is kind of trying to put in a top here. But overall, the trend remains up, and we continue to focus on the long side for now. Now, just taking a look at the overall market momentum and things like that, let's pull up the advancing declining issues. If we look here, you can see the main focus is generally on the NYSE. We're looking at advancing shares and declining shares. On Friday, it was pretty much everybody running for the door, panic selling, and that's the herd psychology that if everybody's running for the door, usually we're at a pivot low or a significant low for a bounce the next day. It was about 8-to-1 ratio, so there was about 8 traders hitting the sell button for every one buyer. So we really saw a sharp pullback on Friday, and again, everybody running for the door. And generally, a ratio of 3 or higher I consider to be oversold, and we usually see some type of relief bounce the next day. Overall, new highs are actually still holding up relatively well considering the sharp pullback that we had. Again, this number here doesn't really mean a whole lot on a pullback. It's when we get a bounce, how quickly do they recover. And this we really want to see these bounce up into the high hundreds, 200s, even 300s. Now taking a look at the bar chart momentum. If you look here, again, this is a short-term indicator. Anything above the 101, when we get a daily close above the 101, we're usually overbought. We usually see a pullback the next day. Anything at or below the 99, we usually see the market being oversold, and we usually see a bounce the following session. So Friday we close right down at this level. It doesn't matter how far you are down in this zone or how high up you are in the upper reversal zone. All it means is when you're down in this level, usually you see a market have a bounce the next day when you're down here. And that's pretty much what we're going to see this morning. We're seeing the equities bounce up pretty strong this morning. Taking a look at the stocks trading above the 20-day, we are coming into a pretty sweet pivot zone. We're trading in this 45 to 55 range. Usually that's where you get some type of key pivot points of the market. And again, so 50% of the stocks, we're at 47.8 for a give or take, are trading down at the 20-day moving average. Now when the majority of stocks are hitting the 20-day moving average, there's a natural tendency for people to buy on the moving averages, and so we are coming down to that level. It wouldn't be surprised if we get a pretty strong bounce, but it may linger down here for a couple more days. We did see some pretty strong fear in the market, and usually that can drag out for another couple trading sessions before we see a real bottom get put in. Coming down to stocks trading above the 50-day moving average, pretty much the same thing, just on a different percentage basis. We've got a pullback coming down. We're coming into a bit of a sweet zone here for where we've seen key pivot levels. When it's got to these levels, we've seen a correction or bounce, and we are starting to dip down that level. Now if we do get a couple more down days in the market, some continued fear, some continued selling, this will pull right back down into this little bit of a reversal zone and could lead to a very strong bounce to the upside. Now taking a look at the actual charts here, let's just take a look at the SP 500. Let me just pull up the signal chart. Here is the SPY daily chart, and you can see here we've been in a strong uptrend. We've had these counter trend pullbacks. You can see here we had a pullback, more or less it worked out 2 weeks ago, and we ended up getting long. We caught a nice 3.5% bounce, took most of our position off there, got stopped out, the rest at break even. We've had a couple more signals last week, and again on Friday starting to get oversold. We're waiting for the intraday momentum to have a reversal, and we'll be looking to get long for a potential another strong move to the upside. Now it may end up just being a fade higher, and if we just zoom back a bit, if this is a market top, we'll see price more or less kind of form a little bit more of a bearish flag here and come up into volume and eventually start to break down to the downside. But again, if we do get continued selling and an intraday reversal, we'll have a nice play to the upside as the trend continues to hold up, and then once things roll over, we'll be actually looking to play the downside. But until then, we're focusing on the overall trend, which remains up. Now taking a look at the SP 500 futures 24-hour chart, if we just zoom in here, you can see where we're trading the last couple of trading sessions. This is more or less the three-wave pullback that we're starting to see. Friday we had that massive drop at the end of the day, completely sold right off down to the lows, taking us to an extreme oversold condition. Reason for this huge sharp move here, just on a technical basis, it was Friday, meaning people want to get out of their positions. If things are starting to break down, they want to rebalance, recalibrate their portfolio so that they're not stuck on the wrong side of the market. If you look here, we've got a previous pivot low, that if that low was breached, there's going to be a level of stops triggered. There are a couple other key pivot lows here that if that was triggered, there's going to be a large set of stops there. And again, there's another key pivot low back here that if that level is breached, there's going to be more stops triggered. And then of course you've got this next key pivot low back here that if that level is broken, you're going to see more stops get triggered. Now you can just see what happened. Price pulled back, had a bounce at support at this 20-day moving average, which is this green line stepping its way up. It's also a previous low. Once we broke that, stops were run, huge flood of sell orders, breaking the next pivot low, triggered more sell orders, went in parabolic, just full out waterfall sell-off, triggered more stops here, triggered more stops here. You get this big washout, huge volume spike, and then the market closed. That put us into an extreme oversold condition. We're getting a bounce up in pre-market trading. Considering it's pre-market, we've got still some half decent volume going on. We are coming up, if you look into this price, volume by price, key resistance is going to be right around this zone here where the majority of volume traded, and we're kind of working our way back up to that level. If it does work up there today, we could easily see another wave of selling bring us down even lower and give us a sharper pullback, flushing the market out again. But overall, this morning we're actually seeing it's a pretty strong move up. We're up about 0.6%. But again, we're stuck under some pretty key resistance here, and we're going to see how things play out in the morning. As we are oversold, the market is giving us a low risk opportunity to get long, and we're still within the uptrend, so maybe getting long today or tomorrow. Now let's just take a look at the US dollar index chart. US dollar index really hasn't given any insight this year. It's kind of been chopping around. The equities have been moving with the dollar some days and not, and inverse the others. So not really a whole lot going on with the US dollar index. It did pop and break to the upside. It's pulled back. It's sitting at support here above this previous little flag and cluster. It's losing momentum. You can see if we just zoom in, it's starting to stall out with momentum. We have obviously a strong pop to the upside, big red body candle, smaller red body candle, smaller one almost like a doji, and it's settling right into the tops here of support. So it could easily find a bounce and continue to move higher. That really doesn't give us much insight. Sometimes when the dollar's been moving up, stocks have followed. Other times it hasn't. So not really paying too much attention to the dollar right now, but I do keep my eye on it in case I do find some type of trading idea off it. Now taking a look at a couple other indexes here. Let's just pull up the utilities index, the XLU. It has been pulling back the most with a nice strong three-wave correction. It's down about 10%. This looks like a pretty bearish chart. You can see strong volume selling off here. Overall, this to me, all the conservative money has been piling into it, and now that the equities market, the SP 500 broad market, is breaking to new highs and showing some real momentum to the upside, we're seeing money flow out of these conservative plays, almost like the risk off kind of play, and it's been piling into the equities market. And this is one of the things that's telling me that I think the equities market, the overall SP 500, is very close to a top because all the big money is rotating out of utilities. Seems like it's dumping into the SP 500, the big major stocks. And overall, utilities on Friday, they were actually the strongest out of all the sectors. It was only down 0.6%, while everything else was down more or less 1% plus. So it's showing that money is slowly kind of starting to become fearful and getting into utilities, even though this chart doesn't look like it. If you watch time and sales and price action intraday, money is slowly starting to rotate into utilities, and again, that means there's fear creeping into the market, and we want to buy the SP 500 in an uptrend when there's fear and everybody is flushing out of the stock market. Another one is the XLP, which are the staples. Money has been moving out of the safe plays, the staples, and kind of piling into the SP 500, and that's kind of telling me that the general market, everybody is now becoming extremely bullish on the market and getting out of these really conservative plays here, and that again confirms that the masses are thinking that the equities market is going to continue to rally, and they're getting into more leverage plays to the upside that are a little more risky, and hopefully they all get caught holding the bag and we get to play a nice major sell-off in the coming month or so. Taking a look at precious metals. Actually, I'm going to pull up the bond chart real quick and continue to go with the herd psychology. Looking at the bond chart, if we zoom back, we continue to see bonds sell off. Just get the full. You can see here we've pulled back. We eventually had this kind of basing pattern here. It broke out of, went to the upside, hit this previous high, stalled out, and it has come way down. Everybody seems to continue to be flowing out of bonds. We've made some new lows in bond prices, and this here is also telling us that everybody now is becoming extremely bullish on stocks. They're selling their bonds, they're getting into the equities market, and of course usually the herd does the opposite of what you should be doing, or their timing is way off, and they're all piling into the stock market right near a top. So this here, I think we're going to see it chop around for a while. It's making new lows. It may even have a real blowout bottom where it picks up speed and goes straight down, and then we'll see a sharp bottom get put in place with an impulse wave to the upside. But overall, money is flowing out of bonds, out of the safe, kind of safer haven stocks like utilities and staples, and piling into the actual more or less risk-on stocks. And that this will, I think, soon reverse, but until then we continue to follow the trend, because some of the biggest moves in the stock market happen during the last 5 or 10% of the trend. So let's just take a look at precious metals. Here's the gold chart. Gold's been floundering for a while. If I just zoom out here, you can get a bit more of a big picture. Had that big drop, big crack to the downside. It's been kind of floundering, kind of trading sideways. Overall, it still remains in a downtrend. Very clearly, in a downtrend. It's broken down, still forming bear flags. You've got this previous move is down. We've got this bear flag forming. It points to possible lower prices. Now I've mentioned before, I think silver has put in its bottom. I think it could go back and test those lows that it made a while ago, but gold has yet to break that pivot low, and I do feel as though there's another wave potential in gold, bringing it down to probably the 1300, which will be down here, and I think that will be a real final kind of washout in gold and could be the actual bottom. So there's still some more damage, I think, to be done in gold. Even if it does rally, we need to see a really strong rally above this down trend line, which goes back in the chart a long ways. It has to break this previous pivot high. So we need to see a nice strong impulse wave to the upside. We need to see a bullish pattern form here with good bullish volume, and then it could set up for a move to the upside and have it maybe put in this kind of double bottom here. So really until then, until we get a really bullish pattern or an extreme oversold dip here that'll flush the market out with new lows on relatively light volume compared to, we shouldn't see huge volume like this. It should be a volume spike, but as new lows get made, it should start to happen on lighter volume. Then we'll be looking to get long precious metals. Looking at the silver chart, silver had that washout bottom. It dropped about 10% in pre-market trading, had a strong bounce back. The fact that it dropped 10% and almost not a whole lot of volume behind it shows me that most people are flushed out of silver already, and that is a sign that bottom is likely put in. So I think silver is just kind of floundering around down at this level. It's stuck under resistance right now, and it may end up sliding and dipping down somewhere to test this previous low level down here again, and gold will pull back and make new lows, and then after that I think we could see a bottom put in and gold and silver rally along with their miners. Taking a look at the GDX, the gold miners, doesn't matter if it's gold or silver miners, they move somewhat pretty much the same, clearly in a downtrend. Had a strong pop there last week, sold off again 2% on Friday. We're seeing a little bit of a pop this morning, up about 1%. They're trying to make a bottoming pattern. They're trying to base here, but it's the same pattern we've seen over and over again. Just because it's sold off so much doesn't mean it's got a bottom. We've seen it try and form these little bottoming patterns over and over again. Bottoms keep falling through, but falling out. It keeps reversing to the downside. We are coming to pretty key resistance. We got these previous highs. We've got this down trend line. The overall trend is down, and we really saw this a sharp bounce, and it stalled out really quick with a 2% pullback. So we'll see how things play out. Again, for miners to start to show some type of bullish pattern, we need to see an explosive move to the upside, and we really need to see some type of tight bull flag, bullish price action, and it could be an opportunity to get long in it. We're going to have to pay attention to what gold and silver are actually doing also, because that'll play into how strong this move really is. Now overall, we still have a lot of resistance on miners. Even if it has a strong bounce up, it will have started to clear this moving average, and we will have a lot of resistance coming in at this level in here before it can really kind of break out to the upside. That would be where it would stall out somewhere 34, 36 area and form some type of bullish pattern, and we'd want to see the metals start to follow suit. Now if we just take a quick look at add the volume to this chart, if you look at the volume and we just go to the daily chart, actually we're going to go to the 60-minute chart, there has been some pretty strong buying going on in the miners. I'll just zoom in here. We've seen some very strong, huge volume spikes. We're looking at 8, 10 million, 6 million volume spikes to the upside. So if we just look at this chart here, you can see we've had a pop in price, big buying here, very strong buying this day. So as it pushes down to a new low, we're seeing some big money step in and start to accumulate and build positions. Again, very strong volume on this move up, and again very strong volume on this move up. And on Friday, right at the end of the day, we saw a strong pop. It was on pretty strong volume, and So there is some pretty big money rotating into these gold miners, slowly scaling into this position. Doesn't mean it's the bottom, it just means that big money is slowly rotating in, and big money can be rotating into these positions for months, depending on the size of the position that they want, and they're scaling in as the market slowly starts to put in a bottom, and they're the ones that more or less put the bottom in. So it doesn't mean we're at the bottom, but there are some signs that we are getting very close to a bottom in miners and precious metals itself. Now, taking a quick look at energies, crude oil continuing to kind of get stuck in this wedge. Had a strong sell-off, strong recovery again this morning. Not really a very clean chart, really aren't any clear setups on it. Looking at natural gas, we're seeing it pull back. Its sweet spot is somewhere down around the 350 area, 360 area, so we really want to see this level be broken. And again, if we were to just zoom back a bit, the next level here, we really want to see this kind of three-wave correction drag out and come somewhere down into this 360, 350 area, at which point would actually be a very bullish setup to the long side. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.